Morning, this is Chris from Solstice as well as Excel. You can find us on both websites. Remember, we're not a broker dealer. Our past performance doesn't give us any indication of our future results. Remember to use at your own risk. But the most important thing is I don't want anyone to trade alone because sometimes people make decisions on a position, whether it's in the equity option or in the commodity or in the crypto such as Bitcoin and Ethereum, and they buy a position because they think that they are going to be missing out, or they hold on to a position when they are wrong and they add to a loser. So most importantly, you need somebody to hold your hand, teach you technicals, which are, the micros, the fundamentals, as well as technicals, in order to be positioned at the right spot on how much are you willing to gain or lose in each position that you every time you enter without being biased. So most importantly, understanding risk, have someone to give you a helping hand, and you can join us on Discord, which is a live feed, and you can check the website at solstice.axalatrai.com. Secondly, you have the YouTube channel, which is offered to everyone. I have launched it, but most people don't, I don't market much to it. If you can subscribe, hit the like button, let us know what you think of it, so that way we can get your commentary on a weekly basis. It's for free for everyone on YouTube channel. Let's go to the first slide that I have up here. And what I did, I put on Thinkorswim, which is, through Schwab, that platform, which is a small cap Russell iShares IWM daily charts. But what I wanted to do, instead of had the candle trend, let's just change it from candle trend just to regular candle, so you can see the filling on the charts. You can see the April low, after the tariff news. Then we eventually broke out here in June, July, and eventually we went higher. And this year, from January, February, we've been having difficulty, maintaining the high. And we eventually touched the 200 SMA. If I zoom in on the small cap Russell 2000, you can see that the volume was a large spike, but you can see the breakout here. We were, in an uptrend. We consolidated in this range. If I box it, what I want everyone to pay attention to is this area here. That was the consolidation before the break up, and we never tested this candle here. We tested the 200 SMA, fell in it, and bounced back up. So most importantly is we have to pay attention to this level on the small cap in case we create a lower high and continue back down, or do we fall through and continue lower to the backside of this consolidation in this gap down here. So I wanted to show this on the daily chart before the weekly. Remove the drawing, so we're going to switch this to a weekly chart. You can see here I have a 3-year weekly, and we can see that this candle, if I zoom in here, you can see that consolidation here, the move down, rally up, retesting this area. You can see we stopped right here, but we have the 50 SMA and the 38.2 fib down here. You can see the support here, the high here, which you can see at resistance. That's the 38, 50, 61, and you can see the 50% is sitting at the 116 SMA and the 38.2 fib, the 50 SMA sitting slightly above it. Do we continue straight down? Because the candle formation on this candle, if I zoom in here, what I want to talk is about the structure of this candle. You can see that the structure is a large candle sell-off, because we tried going back into this one, this doji, inverted hammer. We went just halfway and we ended up losing it. We got a, a little body, a little wick up here. We got a little wick on it down here. You can see it. If we end up losing this wick and this structure, I am looking for this gap down here where the consolidation happened in this area, because you can see that round came up, fell down, retested, and eventually broke out. If this candle going to continue lower or not on the small cap, this is very important to pay attention to these levels on the small cap. Let's take a look at the SPY. I'm using the ETFs first before I use the E-mini, micro, S&P, or the NASDAQ, or the E-mini directly, so that way everybody understands it. So you can see that there was a lot of consolidation in this area. We'll mark it in a box, okay? This is a very important area, and I have the 38.2 fib here from high to low. You can see the support from the April of last year. We can see it down here. We rallied up. We made this consolidation. We couldn't make it up and we fell down. We tested the 50, but we held here. Do we create a lower high here in order to continue, or do we reverse back up? And this is why I marked it here with a little box to show you that, you know, that 615, 610 area, 612 area, in case we do come back down, or do we reverse create a lower high on the day, on the daily chart on the S&P 500. So if I go to a daily, I wanted to show this a little bit more in detail. So you can see I marked this and I said, hey, we have overhead supply here. We couldn't take the price level, which is the point of control, and the value area low. We tried the week before rally up. Tested it. We tested the 18 SMA and we fell through it. Now we got the 18 crossing the 116 and the 50 and the 18, which is considered a death cross because this is considered supply area. All this area up here is considered supply. If we don't come back to supply and value area low, they may be continuing. We can see that the Tuesday candle was up, couldn't make it up to the to this consolidate, because you can see that there was a consolidation here. I want to show it here before the breakdown. I wanted to show that 675 area and 674. When we came back up on Tuesday, we couldn't make it back up and we fell through. That was the Wednesday, Thursday, Friday, and we lost the 200 SMA. And I had marked this area because of the tariff, as well as the Federal Reserve Board, you know, Alan Greenspan talking about rates that they're gonna, you know, not gonna do much to them. Then we eventually rallied up, couldn't make it. We created some kind of a shoulder, a head and a shoulder, and this was like a double shoulder here like this one, and eventually fell through. We couldn't make it back up and we lost the 200 SMA. So I am paying attention to that big range here in the 615, 620. This is why I marked it here on the charts, to let you know how to look at it. So we're gonna remove it. I'm going to remove this one, and what I want to do, if I take this high from here to this low here, or this week's high to this low here, so what we can do, I can do a measured move or Fibonacci. We can take the high from here to this low here, and you can see the extensions coming back, you know, from the zero. In case we come back up, the 38.2 will act as resistance, or the 1561 create a lower high, because we are in that downtrend. And if we do end up breaking this area, if there's going to be continuation, you look for the 23, 38, 50, and the 61. This will match this consolidation right here when we retested it, because this was the breakout retest. Fully come back in, test 50% of it, and rally up. So this is an important area for me to see if there's going to be opportunity on the charts on SPY. And you can leave these fibs on. You can, you know, measure them. You get to know that you, from 0 to 100, you can see the extensions minus 23, minus 38, minus 61, minus 78.2, minus 100, and vice versa going back up. You can see the 161 on the top, similar to the minus 61.8. So I'll leave that on there. So let's take a look at the QQQ. And you can see in the QQQ, I had done, a cone in here. And I said this was considered like a double top up here when we couldn't clear this area. We came back, we got a lot of supply in this area. I do have this gap here, and I do have this gap down here from the April rally and eventually the breakout. So if I zoom in here, I want everyone to pay attention that the NASDAQ lost the 200 SMA. This was the Tuesday candle. Monday, you can see that move, because remember, we are trading on noise that's happening in the Middle East, in the Gulf, and, you know, due to the Iran war, and whether we're going to have boots or not, I don't want to go into details on it. But most importantly, they were trying to secure the oil prices. They have been spiking up. You can see that there was a lot of consolidation in this area here. So what I'm going to do is grab this area here, where I'm going to mark it. Oops, this is a Fibonacci. Let's do this with a box so everyone can pay attention to it. So we can mark it here all the way to down this area here. Is it possible we can come back all the way down through that supply? This was considered, you know, support, and eventually we broke out of it. Do we come back and lose because we have lost the Federal Reserve Board and the tariff, and we are testing this area, and we closed right on it. You can see it on that candle just slightly above that area, but we are below the 200 SMA. So very importantly, if I take the weekly fib, not even from here, from the high to this low, and I just take the weekly and I measure the Fibonacci on it, I'm using fibs so that way everyone can see where the levels are. And you can see that we can come back to this area here and vice versa. If I take the high from here, you can see it all the way down to here. You can see that I do have the 38.2 and the 23. There's a 27.8 and there's a 14.6% right here. So I want everyone to pay attention to these levels without being biased and be able to understand the risk involved. So if I move up here, this is considered supply. Oops, let's do this again. I've been doing this for quite a bit without paying attention. And this is considered, for me, this area here as a supply zone because of the, the movement up in the charts. We couldn't come back and clear the 18 SMA. We tested it on Tuesday. We fell through it and we lost the 200 and the 50 and the 18 cross. This is considered a death cross because due to the supply up there, do we find demand in this area or do we find support, create a lower high in a smaller rally coming back to the backside of this channel and the Fibonacci, which is the 50%, the 200 and the 61 and coming back in. Remember, those rallies may be sold. You have to pay attention to the global market, what's going on in the market in relationship to the news that's happening, as well as, the technicals. Remember, use the micro fundamentals, then use the technicals in order to help you out. Let's now go look at the volume profile here on the QQQ. We're going to go in the style. In the studies, I'm going to load the volume profile. It's called, I'm using the monkey bars, and what I wanted to do is show you that if I zoom down here, let's go down. It doesn't want me to do that. Why is it doing this? That is a little weird. Can't even get it to move. Okay, so we can see the volume profile down here, where the point of control and the time spent was a lot of volume. We may be coming back down to where that smaller node where there is less volume in this area, and there's a larger node volume right here. If I do a 3-year, we can see that the 3-year is sitting right in this area, and you can see the volume gap right here. This is a large volume point of control. There's another one here, and these are big nodes in volume. This is the gap. Is it possible we can come back to the 38.2 in this area right here where we have the box? Let's just do this with a box. You can see that this area possibility that the NASDAQ can come up here, and on the weekly we held the 50 SMA. Let's go now take a look at the micro ES. And what I want to do in the micro ES, show you that I marked this area with an oval before in this area, and eventually we broke up. We are holding the 50 SMA on the weekly chart, but most importantly that there is supply up in this area because this is where most volume happened, and the point of control even coming back to the backside of the consolidation up here and falling back through, which will be creating a lower high on that S&P 500. Let's go now, get rid of that volume. We're going to go to a clean chart. We're going to load the clean chart. Okay, we're going to do it with clean only moving averages. Okay, and I'm going to show you the anchored. You can see that the moving averages and where we are in relationship on the weekly. We're going to go to a shorter time frame, 78-minute or 4-hour chart, and what I wanted to do is show you how to look at the measured move in relationship to these levels, in case, because the Friday we rallied back up and closed in there, but we could not take out this area. So this was a Tuesday high. This is the low. You can see the Fibonacci high and low, and that's the 50%, and that's your 50 SMA and the 18. If we come back in this area, create a lower high, testing the 50 or the 116 or the 200 in this area and coming back down, that's great. If not, and we fall through, and we fall back due to the news out there. So what we're going to do is do the measurements, and we're going to extend them to the left so everyone can see them. We're going to edit the property. We're going to make it blue, edit the property. We're going to extend them to the beginning of the month or till February, which is okay. We're going to change the color to blue so everyone can recognize them, push OK. And what we're going to do, instead of that time frame, we're going to use a 30-day, 4 hours, so everyone can see that in case we could not get back in this territory up here between the 80 and the 0 line, which is the 100, and find resistance. Can we come back to the high of Tuesday? Possibly. If we come back here and we can't find resistance, we cannot continue and break up, that would be an area of resistance. So let's take a look at the micro NQ, and we'll do the same thing on it. So you can see that there was a lot of supply up here, and we fell through on Friday but rallied back up. So I am paying attention to the value area low. This is on the profile. We have the value area high and the point of control. This is a level that I have on the charts from way before on the monthly. So what I'm going to do is measure the distance from high to this low. We're going to extend it to the left, edit the property. We're going to go till February 1st, okay, everyone? So that way you can see a little bit more. We're going to do 0, 1. We're going to change the color to blue like we did earlier, or cyan. And this is the extension. And if I look at it on a little bit longer time frame, and if I use a 90-day, you can see where these levels are coming from. And this is part of the, so that I had marked before. You can see my markings here. This is another marking up here in yellow, and I have the point of control. So this is value low, point of control, value area high. I had marked them on the NASDAQ. This is on the monthly, and you can see it on the micro NQ. And we can see here we created a double top. We rallied up. Then we created a double top up here at the 25,217, 210. Let's call it 210. We rallied up and fell back in. If we end up losing that 24,000 area, is there going to be continuation to the backside of this open cone and breaking through it, coming back to this zone to find support and bouncing back? So we're going to trade what the charts offer us, not what we think. And the most importantly thing is I'm going to show you one study up here, which I'm going to go to the YouTube, go to the and you're going to go, I'm going to put the YouTube here. What I wanted to do is show you on the daily chart that the S&P or the NASDAQ 100, the Magnificent Seven, which is the Apple, Amazon, Alphabet, Google and Google, Facebook, which is Meta, Microsoft, Netflix, nvda, as well as Tesla. And I have included in there Netflix. You can see Netflix's 0.9 was green. If I take a look at the S&P 500, it lost 1.5%. The energy was, the sectors in the energy, XLE and XLI, industrial came back in. We have to pay attention to these sectors because they're selling everything off due to the news in Iran. The discretionary XLY, financial XLF, utilities, which is XLU, XLB, material, consumer staples, XLP, technology, XLK, real estate, XLRE. You got the industrial, which is the XLI, healthcare, XLV, and telecommunication, XLC. You can see Bitcoin came back in, Ethereum came back in, gold came back in, and the VIX spiked up 11.3%. So most importantly, that you understand the sectors without being biased. We're here to help. If you have any questions, please let us know, and we'll take care of you. Take care. Over and out.